The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 2nd, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstances of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your experience, for your presence here, well, your experience here as well, but really for your presence here. But truly, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, we've got you covered there. We've got your back. You can always send me an email, steve@tfnn.com. Inside the subject heading, though, please put radio show question. That way, your email will stick out. And you stick out, you should, versus all the junk that probably you and I know I get it. That means you probably get it too. How do we get rid of all that junk? But look, I want to know about your email. So radio show question will do, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on Flat Wednesday. Mostly because I suppose at this stage here, traders are just waiting to see what the announcement from the Fed is going to be. That's going to be at 2 o'clock. All the fireworks today, the grand finale, coming at between 2 and 4 p.m. when you've got our man David White and Tom O'Brien doing their shows. Here we've got the Dow off 10 points. It's flat, no big deal. S&P off 4 points. Today's day and age, the average true range we've got, it's basically a smidgen. The NDX 100 is totally flat out here. You do have Apple up $7.40, so there are some troubles in River City. Russell 2000, on the other end, is not flat. Russell is having a party of its own. Did you get the RSVP? I did not. It's up 8 points, trade out at 15.59, so we should take a look at that. Semis are flat. Transports are flat. New York Stock Exchange is flat. NASDAQ Composite is flat. Wilshire 5000 is flat. The spot volatility index is down 36 pennies. Trade out at 15.13. That is not flat. Gold is flat. It's off a buck. We'll call that flat. Silver up nearly 2%. So that is not flat. That's up 31 pennies. Trade out at 16.35. To the upside, though, we do have some leaders. Dollar-wise, you've got 27 bucks, a 15% gain for Little Fuse. Sounds like that fuse is lit. LFUS is the ticker symbol. Only 400,000 shares traded in that equity, so it's not exactly your most liquid of individual stocks. You've got no idea how to actually pronounce this. Maybe somebody out there in the den can tell me. B-E-I-G-E. I know that's beige. Beige N-E. But that's probably not it. It's some type of foreign company. It's got to be. It's up 15 bucks and it's up 10%. Shutterfly's up $13 or 15%. Wayfair, W's the ticker symbol, up 9 bucks, 14%. To the downside, it is Aspirion Therapeutics, 22 bucks or 32%. John Bean Technologies, JBT is the ticker symbol, off 14%. That would be $15 and change. Booking Holdings down 15. TC Pipelines down 10 or nearly 30%. That's got 3.6 million shares behind that move. Estee Lauder down 10 bucks or 6%. So there are some things to look at. In fact, individual stock-wise, when we left off yesterday, the question was, this is probably a bummer because I don't have all my workspaces open, but maybe this one has it. Does it? No, it does not. That's okay. We can go ahead and try to make it happen. Yesterday, look, you and I, we talked about APL. You and I are just simply pattern traders, pattern recognition traders out here, right? And as we pointed out, let me just put the chart of Apple. The question was, did the market know something in advance? Not in advance of us, but in advance of everybody else who's not a pattern, who's not a market timer, who's not a pattern recognition trader out here, right? And what we looked at here was we said, you know, as we were doing the show, Apple had confirmed a Gartley buy pattern. Now, that Gartley pattern looks something like this. I may not have grabbed the exact swing points, but close enough for our work. There was a nice A to B equals CD to the downside. It's nice to color it in here because it has that look. Well, really looks like butterfly wings. We don't call this pattern a butterfly because this is just a retracement of our beginning point. In this case here, X marks the spot, which is the trading day of February the 9th out here. And in order for this pattern to confirm, and I'm going to do my next workshop on these silent signals, for which are Japanese candlesticks, especially when you combine them with patterns that are out there. We got that signal 2 days ago. What we didn't get, though, and because this had a price oscillator below zero, what we didn't get was a real confirmation. In other words, price had just bounced up to resistance out here. Then what happened yesterday? What happened yesterday, and the way that the market close was price was above Stevie's red line. By the way, that red line number 168.31 as we speak right now. That was a confirmed pattern, a confirmed Gartley buy. Now you can see, instead of like Amazon, instead of Google, who've come out with great earnings and so forth, where there was a sell-off right from the get-go, we didn't see that with Apple. And that's got to make you say, something to think about. So now what we're going to do is we're going to switch over to our other chart and just try to get a feel for what is Apple doing, where is it headed to, what kind of volume is behind this move. When we take a look at this chart right here, this is the A to B equals CD pattern, meaning I'm looking at the high from March 13th and the low all the way down here on April 27th. The reason why we take a look at those retracement levels is because those create the floors or price projection areas where it is we anticipate price is headed to. Now, in this case here, we can see that yesterday's close was right at that first floor, 0.382 retracement, because every Gartley has has 5 different potential outcomes. The first 4 are retracements. 0.382, 0.618, which, by the way, we are trading above right now, 174.76. Let me just add the volume metric to this because we are going into a gap, and that's important for us to take a look at. So just give me one moment to do that. By the way, volume today is 43 million shares, and the gap to the downside was 34 million shares. So now that's a foregone conclusion, and that's going to help you and I figure out where Apple is likely headed to. Can't give you a guarantee, but I can guarantee you the information we do share, it is worth knowing out here. In other words, you would not want to be short Apple. So let's take a look at where price is likely headed to. What I want you to do in your mind is mentally fill in the gap. Because if you take a look at today's candle, gaps are your friends. But because we're visual out here, it's really important to paint that entire body of the candle all the way down to yesterday's close. In essence, it would look something like this. Let's see if Stevie can kind of do it. I can do basically anything, just as you can. If we were to color it in, let's see, can I do this in time? I don't even know if I can color it in, but there's your bar. Must be some way to color this in. Fill background. There we go. Fill background. It's green. And we need a limeier green out there. We come back from this break. I'll try to have this figured out. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So before we went that break, we were taking a look at the chart for Apple. I have figured out how to kind of create a fill in a little bar here. I just can't get it to center itself exactly. But the point is, let me turn off the retracements here. That's going to make it a little bit easier. Everything with lime green. There we go. So in essence, when you take a look at where Apple closed yesterday, if you just see that gap visually, it's more stunning, so to speak, when you don't see the gap here. But in essence, it is the same thing. It is a wide-ranging bar. And what markets, as you know, you've told me many times, you said, Steve-O, markets do not end on wide-ranging bars. Well, now, when we go ahead and we put the retracement levels back out here, because this is going to help us to identify the 5 different outcomes, or at least 4 of them, what we can say is that the Apple is headed to 178.61 at a minimum, because it's pushing into a previous swing point with volume. It's not going to test that today. By the way, the date that we're taking a look at inside of Apple is April the 17th. So Apple is on its way to the 178.61 level. Not too much higher does it have to go in order to really test its all-time highs out here from March 13th. Now, that is 31 million shares, the low of which is 179.24. If it's going to make its way to 178.61, it's going to make its way to the bottom of that March 13th level. 179.24. If it comes barreling in there with 31 million shares or more, what that's telling you is it's going to go ahead and test the high, 183.51. That's outcome number 4. Outcome number 1 was the 0.382. Number 2, the 0.618. Number 3, the 0.786 retracement. We think that's already in the bag. Number 4 is the 100% move of a move. Now, it's either testing the low or the top of that swing point. So the range is 179.25 or 0.24 to 182.59. And if it takes that level up, because every Gartley has the opportunity to turn into an A to B equals CD to the upside. In the case of Apple, and that is a absolute possibility, it is acting differently than what we've seen in the case of Amazon and so forth. Then where Apple is headed to is the 193 level. That would be your 1-to-1 A to B equals CD. But as you pointed out to me, Steve-O, if this is the case, and Apple is on its way to make that A to B equals CD, I've heard you loud and clear. You said there ain't no way that the 1-to-1 A to B equals CD is where Apple would head to. It would do something more than that. And the reason you say that is because of the explosive way that this has come off of that C point. Tells you one heck of a lot. Therefore, it's the 202 area. Let me just bring this down just a tad, where Apple might head to. You have to take things one step at a time. You rely upon new information that the market gives you. But as we speak right now, 121 in the afternoon, Apple's on its way to 178.61, 183.50. And if it gets beyond that, we're looking at the 200 area. Now, that's just one stock. And can one stock save the market? Which was Eddie's question from a few days ago out there. I don't know the answer to that. But if Apple's doing so well, why is it that the NASDAQ is basically flat out here? That's something to think about. Let's go take a look at some things going on under the covers. Let's go check in on the health. Oh, I know what we can do. Let me see if I can find my divergent patterns. It'd be worthwhile to go take a look at that. So let's try to open up that file. Give me a second here. And the divergent patterns that we're looking for, we're just trying to understand how is price doing on the equal weighted ETF, as well as, in this case here, the QQQs. So we're looking for divergent pattern 2. Yeah, I think that'll work out here. That should populate in just a moment. May not provide us with any information, but it is worthwhile for us to go take a look at it. This was not what I was looking for, but it's here, and I can make hay out of it. If we take a look at the QQEW, that's the equal weighted ETF. That is the top portion of our screen out here. And just trying to compare that with the Qs itself. So interestingly enough, the equal weighted, I always say, is the one that really helps point the direction. But it helps point the direction when we see divergence. And one day's trading does not make a divergent pattern. If, on the other hand, the QQEW were to close below the low of April 25th, by the way, that price is $57.94, while the Qs are moving higher, the ETF, that would be telling us a lot. It's kind of like making sure we spent a little bit of time yesterday trying to understand how the indices across the world, but we looked at specifically the S&P 500, how they're performing in all types of currencies. We're in a global market out here. Well, in the case of and looking for divergence, and what we saw with regard to gold may have found a bottom. We'll know probably more by 4 o'clock today, but it got down to the bottom of its consolidation level. I'm not showing you the picture of gold. This is just a little you and me having hashing things out here. And but gold priced in euros was doing just fine. And it is gold priced in euros that has more meaning than gold priced in dollars. Why? I don't know. I just know that it does. Likewise, when we come bringing that all the way back to the QQEW, First Trust NASDAQ 100 equal weighted ETF, we look for divergences. Interestingly enough, though, that is moving to the downside, whereas the Qs are either flat or moving to the upside. No real divergence here that we need to take note of. We can see that, in essence, when the Qs made its high, just as an example, so somebody says, give me an example, Steve. I'll give you an example. Let's just use a red line. The red line, the QQEW, made a double top out here, whereas the Qs itself made a higher high. This is coming back into the time period of March the 12th out there. And so that's just one example. There's other examples down here. Here's one where the QQEW from September 8th of 2017 into September 25th of 2017 was making a higher low, while the QQQ series ETF was making a lower low. So when you're playing liar's poker, what you want on your side as a partner are the equal weighted ETFs out there, providing both you and I with just simply a ton of information. Let me go back and, because I really need a second here. Let's go take a look at this right here. This here happens to be when the moon is closest to Earth during its lunar cycle, which took place back here on April the 20th. I don't remember the exact time. It was like around 10:22 or so, but don't quote me on the time, but really darn close to probably 10:22 or so. And at that stage, Stevie just likes to mark that price level, primarily inside the ES Mini out here, but I've learned to go ahead and just simply mark that point in time on all of the ETFs. Now, this is Stevie's discovery here. So you won't see this published in a book that I'm aware of out here, but it acts as a invisible sometimes maybe you have an animal and you put up that invisible fence out there, and what happens when you're a dog, your pooch, or what happens to walk into that invisible fence? Bam! Gets hit and jolts itself back. Well, for some reason, the invisible fence line inside of these equity futures contracts out here also take place. And you have to give it just a tad bit of room out here. But if you take a look at the action last night, you're looking at the upper right-hand panel screen out here, you can see how after Apple's earnings, the NQs, they went right up to the invisible fence. And then what they do? They turned right back down. Hey, if Apple's going to lift all these boats higher, all those equal-weighted ETFs, and they want to get into the game, the NQ will close above 67.36.50. You can quote me on that until Apogee shows up, which I think is in a day or two. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go take a look. There's no questions out there. So let's go take a look at some of the other. We were talking about really the NDX 100. We're talking about Apple. So why don't we just go see what's going on with the top 5 equities or so? I believe it's the top 5 equities. Let's go take a look at Facebook, Netflix, Google, Amazon. Let's start with Facebook out here. Facebook is up $2.84, 18 million shares. Let's go figure out what Facebook is doing. Now, remember, Facebook gapped up too in a big way. So another huge, wide-ranging bar. And Facebook was certainly not sold off when it came came to earnings. And what Facebook did was it went right to the logical spot, right, where there was a gap to the downside, resistance, which is being tested again as we speak today. 177.17 is the number. Now, in this case here, the gap to the downside was 88 million shares, and the gap to the upside was 77 million shares. But resistance is where it is trading as we speak right now. There's also a confirmed A to B equals C to the upside. Let's go figure that out. We say confirmed because we're going to use as our A point this nice little hammer candle that occurred on March 26. Your B point is going to be the swing out here. Let's see, which one is higher? April 11th. 168.65, 169, that's going to be the number. That's April 17th. And then our C point was down here on April the 25th. So the B point, which had volume of 22 million shares, was eclipsed with massive volume. That was called a perfect, what's Tom like to use as a terminology? Wide price range, right? Totally wide price range and accelerated volume. Well, you had that. And what we can see here is price made it up to the 1-to-1 level. Now, unlike, this is the opposite of what you and I were looking at in the case of Apple. The case of Apple, when it made that bottom, the signal to you and I was that the cavalry came in, right? Because there was a bullish reversal signal. It's why in a couple of weeks, 3 weeks or so, I'm going to go ahead and do a workshop for subscribers. Look, it's just part of the tools that have allowed me to earn that ranking as the #1 timer in the S&P 500 for the last 12 months, 6 months, 3 months. The same thing in the case of Goldilocks out there. The patterns do fail. There's no doubt about that. They do fail, but you just simply get back into the ring and you trade your patterns. If your right hook fails, are you going to give up on it? No. If, maybe when it comes to golf, your best shot is your pitching wedge. Does it ever fail? Yours probably doesn't, but mine does. You know what I mean? You just simply get back in there and you use the club or you use the tools that give you the edge. Folks, when you and I talk about here what I do inside of workshops, what's done inside the newsletter, they're the exact same tools. There's no hocus pocus dominocus type of stuff out here. It takes a while to get traction and maybe get your arms wrapped around or your head wrapped around and so forth, but you can use these tools with that wide-ranging bar that took place out here. Markets don't end on wide-ranging bars on April 26th. No bearish reversal signal. The candle session on April 27th was not a bearish reversal signal. Just because the body is red doesn't mean it. It just tells you where price opened and where price closed. So we've got no bearish reversal signals in here whatsoever. Today, the volume, volume, 18 million shares. We know we came into that gap with some volume. But look, that's the gap. That's resistance. But if you see it close above 177.17, I'm not saying you will. I'm saying if you do, where's price going to head to in this A to B equals CD? It's going to do the 1.272, which says I'm going to go ahead and actually get up to the 183.41 where I gap to the downside. It may even head up to the 188.52, the 1 to 1.618. The way that price took off of that C point out there of the A to B equals CD tells you that it wants to do more than just the 1-to-1 level out here. So at this stage, with regard to Facebook, Steve-O is saying, don't be short Apple and don't be short Facebook. At least those two. I don't know what the weighting is inside those two issues inside of the NDX 100, but right now they're saying they got plenty of energy. Let's take a look at Netflix. Netflix, I know we kind of discussed this earlier. We know that Netflix has a high volume, high out there in the daily, on the weekly, on the monthly. That means price is going to get back to that April 17th level. We don't know when, and we're in these really choppy market conditions out there. The kind that actually make you seasick, right? Well, maybe they don't make you seasick, but these are really choppy times. For 5 months, we've been trading, and basically, if you take a look at the close of December versus where we're at today on May 2nd, it's a lot of activity. Means it's a lot of wave action out there, but nothing to write home about. It's like you got skunked when you went fishing, whether you were to the bullish side or to the bearish side out here. Well, in the case of Netflix, what do we know? Let's turn on some market profiles. Let's see if we can decorate this chart just a tad and turn on those boxes, both the daily and the weekly. So what we know here is that right now Netflix just trading with inside a narrow-ranged daily set of profiles. The bottom is 305. The top is 316. So now it's just simply churning sideways. To do what? I don't know. But if it does close above 316.62, then you have your answer. It's going back to test those highs, maybe even take them out. And if it closes below the bottom, we're going to call it, even though it's 305.52, we've got to say 304.62 because that's the top of the weekly. Then you have a price move that maybe just simply gets back in the April 25th area of 292.62. So no great short ideas out here. We take a look at Netflix. So, Eddie was asking the question, will Apple go ahead and lift all boats higher? I'd have to say it's more than just Apple. That's going to have to make that happen. But so far, as we take a look at these individual equities, Facebook, Apple, Netflix. Well, that was Netflix. Let's go take Amazon. I'm sorry. Amazon's one that has the high volume, high on the weekly, the daily, the monthly out there. Even though it's sold off, that's no bearish reversal candle. None. We haven't seen one just yet. And right now we've got a brand new market profile. Now look, in the case of, and it's a daily profile, I'm going to turn price off because this way it's much easier for you guys to see, especially if you guys and gals, especially if you're watching on your mobile device out here. In fact, what I'm going to do is get rid of that red line because basically it's the same thing now. Now, if you take a look at the blue lines that formed out here, this brand new profile, what you know by looking at this is that 1615.79 is an area where snipers are sitting. Sellers. Call them snipers, sellers, same thing out here, right? And the reason why we know that, you can say, oh, we knew that from the day when earnings came out of the day after price went up and there was selling. Yeah, sure, that's true. But now we have like a double G confirmation because we have that center line of the box at 1571, closer to the top of 1615 versus the bottom at 1459. Price is likely to go test that 1615 area. And if those snipers decide to just steamroll the bulls out here, they can push price down to 14.59, and there's not anything wrong. It's just trading with inside of a box. It'll feel like there's something wrong because you're talking about 100 and what it might be 165 points, give or take, out there. Yeah. So in the case as we speak right now with regard to Amazon, more likely than not, price just headed to the 1615 area. Guess that leaves one more equity to take a look at before we go to break, and that's Google. What is the googly one doing out here? Google is the one that doesn't look the healthiest, but what it did yesterday was it tested a swing point that had 3.3 million shares with 1.4 million shares. Pretty interesting. In other words, it's rejected the lows out here. And as Obi-Wan has taught you and I, if you can't bust them down, looks like you're going to go bust them to the upside. Interesting. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So still a flat market out here with the exception of the Russell 2000. And Phil writes in, he says, not a question, but Phil, this guy Phil, he's one smart cookie out here. He writes in, and what Phil's done is he's taken the tools that I've shared with you. He's taken Stevie's red line, he's taken that price oscillator, and he's automated some things to do some scans in his trading application out there. And he specifically says, hey, look, in the NASDAQ 100, Steve-O, it has about 50-50 with regard to rising and falling, I'm assuming here the price oscillator, but he's got 60% are below zero and only 40% are above zero, meaning that there's more this counter trend, at least counter trend going on. And Phil, thank you for sharing that information with us, for doing the work that you do, for spending time taking some of the information that I share and working that into your analysis of what the market is doing. Really valuable. I'll add one thing out here that maybe you want to consider doing with what it is that you're doing inside of, and you may have already done it. And if you did, my apologies out here. But and specifically with regard to the NASDAQ 100, you and I kind of touched on this when we looked at the equal weight. And the message you're seeing here, very similar to what we just looked at inside the equal weight. But the Qs, just as we were going through and taking a look at the some of the top holdings inside here. And this, by the way, this is the PowerShare Qs holdings as of last night, as of May 1st out here. And so you can easily get this. And what you'll notice is if you start adding the weighting of Apple, Amazon, Microsoft, Facebook, Google, its two class of shares out there, just those 6 equities, right? 1, 2, 3, 4, 5. And Intel. We'll add Intel in the mix. I believe, I'm close to it. I believe if you take those 6, you get a weighting of 50%. So in essence, the top 10 weightings inside of the Qs, Phil, probably might give you an even better picture with regard to what the weighted group wants to do versus that entire sector out there. So that's maybe one of the approaches that I would take as well. The divergence issues, they show up in breaking swing points and things of that sort, whereas even though you and I looked at a daily divergence, doesn't really mean a whole heck of a lot out there. So add that one to your list. You can do the same kind of thing inside the Dow, inside the diamonds out there. So you just have to know where the freight train basically is headed. Now, I don't know what the answer to that is, but even if we take a look at Microsoft, that happened to be one of the other top holdings inside there. They're all really doing the same kind of thing. Take a look at Microsoft. I'm assuming this was on earnings. No reason to make that assumption. It doesn't really matter. As I said yesterday, we can hover over any candle. We don't know what the news was to us that was behind it. We're just technicians, and it provides us with information with regard to what happened on April 27th. It pushed higher with volume. 48 million shares was taking on 23 million shares. That was from April 19th. That was taking on 35 million shares from March 13th. Swing points being pushed with volume. Says what? Price is going to be back up there. Where's up there? Well, probably the high of 97.90. So you've got Microsoft is pushing higher with volume out there. So we're not seeing things exactly crack out here. So now the answer is, are they waiting on the Fed? I don't know. There was a question that came out earlier, and this was from Pat in Arizona. And Pat wanted to take a look at Stevie's red line on the NQ, the ES, I believe, were the two that you wanted to look at. Then you wanted to look at some different time frames out here, the daily specifically. And Stevie's red line inside the NQ is 66.43.55. Now, Pat, one of the things that we're dealing with here is really Phil was pointing out was, this is one of those where you have to take a look whether doesn't matter what it is we're looking at. What we know is this is just telling us, as long as price stays above Stevie's red line, there's at least more counter trend rally to occur out here. It's when that price oscillator, bottom panel, which is at minus 25 and change right now, it's when that gets to zero, when the test of Stevie's red line takes place, and then what happens, that gives you the ideas that the bulls or the bears in this tug of war that are really going to take place. Now, with regard to Japanese candlesticks, reversals out here, really important with regard to how the market communicates to us. If price is going to move higher in the NQ, the target certainly becomes the April 19th level out there. That's where the cavalry, that's where your bearish engulfing is. So as much as I love Stevie's red line and I love to understand what's going on in the price oscillator out here, we've just been churning sideways so much, really sideways so much, that it's probably very boring to you, because what you can't put on is some kind of intermediate term position out here, some type of intermediate position. Oh, you wanted the 60-minute chart as well. I believe that was, so we're going to give you a bonus. We're going to give you a bonus on the NQ. We're going to give you the 30-minute chart. Here we go. And then we're going to give you the 60-minute. 30-minute is 66.91 out there. And on a 60-minute time frame, the 60-minute time frame, you're going to see put in a topping signal, right? The same type of topping signal you and I, our bottoming signal that we like to see. And as I put into the newsletter this morning, we probably were going to see Apple selling right from the get-go. The reason why we said that was because at 7 o'clock and then at 8 o'clock, when the newsletter was sent out, we saw the same type of topping pattern, the opposite of what's at the bottom. Gave you all the signals. Price was testing the bottom of its 60-minute profile out there. By the way, the answer to your question, 66.97, Stevie's red line on the 60-minute time frame chart. Turns out that Apple wasn't really doing the selling. A little bit, but not really much. Other issues inside here. That's the topping pattern that's inside here. Now, if price closes above Stevie's red line out here, Mike, in Arizona, coming back all the way to its recent highs out here would be a likely thing. At this stage, right now, sellers are the ones, no matter what Apple is doing, inside the NQ, sellers are the ones that are in control. And that would only change if price on a 60-minute basis got above Stevie's red line. I know you asked for it, I believe, on the ES Mini, so we're going to give you that as well. And that's where we're trading basically right now. So it's 26.50. Maybe it's 26.51. It doesn't matter out here. 26.50 is what we're going to call. So you see you got kind of a neutral stance as we speak right now. And so that was on the ES Mini. If we look at the 60-minute time frame, I don't know if you asked for that, but you're getting the bonus out here because we're going to change this chart to a 60-minute time frame. You can see the 30-minute time frame chart yesterday gave that nice little bottoming signal. Up here on the 60-minute time frame, you can also see you have the topping signal, you got the bottoming signal. Right now, you're kind of in the middle of nowhere. So the 60-minute, not confirming anything the way that I see it, Pat in Arizona. So I hope that helps you out. Thanks for writing and depositing all those nickels inside the TFNN machine. We have a request to go take a look at ticker symbol CRON, and that is a Kronos Group. And if we take a look at Kronos Group on a daily time frame, we can see that it's moving lower. Is it testing anything? It's really not on a daily time frame. What I was looking for is for this to see what kind of test maybe well, yeah, it's really not. We don't have any type of, I know you're looking for a bottom or you're long. I don't know from where. What is this likely to do? The daily chart says you got a swing point on April 4th, 3.7 million shares. You're down today with 2.2 already. That's not necessarily good. It seems to me like Kronos, at a minimum, it's going to get down and test 570, maybe 512 out there. That's what it looks like on a daily chart. But when we get back from this break, because we want to be thorough, what's it doing on a weekly basis? Oh, that doesn't look good either. I think Kronos is going to head just a tad lower before it provides you with any kind of really solid information. Steve Rhodes with TFNN will be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We're taking a look at Kronos group out here, and we're just taking a look at the weekly time frame chart. And what we don't like about the weekly time frame chart is the fact that it gave us that sell signal out here. It did it with price moving higher, new and less relative energy. We already had a nice big old bearish engulfing candle from the week of January 12th out here. Nice little evening star, the opposite of the hammer candle on March the 9th. And then you had turned out to be a, well, I'm sorry, it was a three candle formation. That took place on March the 16th, but it closed below Stevie's red line. And so, Mike, I don't like what the weekly says. It says to me, look, what you should brace for is to see lower price, and at least a test of the April 6th, the week of April 6th area out there. Whether that's going to hold the support or not, I don't know, but I would anticipate that that is what's going to take place. Ticker symbol there is CRON, so buckle your seatbelts. Well, in the next minute here, there's not really going to be too much in the way of fireworks, but during Polar Bear's show, maybe there will be. Yesterday, you and I were taking a look at the Apple chart and saying, does the market know more about how it's going to respond to the Apple news out there? And the answer is it did, didn't it? Just took a look at patterns. Well, let's see if the IWM knows something. Because interestingly enough, what the IWM did yesterday was tested its swing point from April 2nd. That had volume of 35 million shares. That was tested and rejected with 24 million shares. That is a classic rejection of a swing point. And if you can't bust them to the downside, you bust them to the upside out here. So is it that the IWM has some type of knowledge as to what the Fed is going to do and how the market is going to respond? I don't know. I just don't know. But maybe it does, and maybe that's something to think about. Things I can go take a look at charts and tell you they just look ugly in a lot of places out here. And I'm tired of getting seasick myself. But stay tuned. Maybe the next wave is coming in, and David White will go ahead and take you through that. Folks, I won't be with you tomorrow. I'm going to do the best I can to be with you on Friday. If I am, I'll be doing the live show between 8 and 9 because I'm traveling. That'll be replayed at 1. So have a great Wednesday, terrific Thursday, fantastic Friday, wonderful weekend, and at a minimum, I'll see you on Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.